The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Spouses Talking Houses with husband and wife real estate team Jennifer and Brian Frost. Everything you want to know about buying, selling, investing, and owning property. So let's get real about real estate.
Welcome to episode 3 of Spouses Talking Houses. I'm Jennifer.
And I'm Brian.
Today we have a guest. Hi, Ken.
Hello. Nice to be
Ken.
here.
And we're going to get real about this question. What's the difference between a settlement agent and or a real estate attorney? So Ken Gould is a local real estate attorney with Gould & Gould, Olde, Patriot Title, and Monarch Title. How many other businesses do you have?
That's it for now.
Okay.
Which is enough. So is the first question?
Yeah, what's
already
been keeping you busy?
Okay. So it's been a very active real estate market in the past year or two, and we're just settling down for the winter months, which is kind of a little relaxing and nice, but still a lot of action going out there, and for you buyers and sellers, get to work.
We just put a house on the market that is very affordably priced and is on a nice lot in Chester under 400. As a matter of fact, it's at 310. And so just in the time that we drove over here, 6 showings got booked.
Nice.
Yeah.
Very nice.
It's not sold yet?
No, but maybe by midnight.
Okay.
So closings, we like closings, and that's what you do.
It is. It's one of the things I do. I do some other things like bankruptcy, and we do some estate planning and corporate development, but most of the practice is revolving around residential real estate, both buyers' sides and seller sides.
We want to avoid the bankruptcy as much as possible.
Yeah. Well, it's good for the down market when things go quiet.
Yes,
We'll
absolutely.
add to the inventory.
Exactly. So we all work in both New Hampshire and Massachusetts.
Correct.
And there are some differences in how the whole real estate transaction works in those two states.
There is, and I can explain some of those differences. I could explain all of them, but it would take a month. So,
yeah. Well, could we just start with what's the difference between being a settlement agent and being a real estate attorney?
Okay, so a settlement agent, first of all, pretty much a settlement agent doesn't exist in Massachusetts.
Okay.
Because in Massachusetts, every closing that is done for a purchase of a residential home, an attorney has to be at the closing, and it also has to certify title to the buyer. Even if the attorney is just working for the bank, they have a duty to certify that the buyer has good title.
Okay.
And that gives the buyer recourse not only against title insurance, but against the attorney for not doing correct work when it reviewed and let him buy the house or her buy the house. New Hampshire is very different. It's a non-attorney state, and settlement agents who are can be basically lawyers or non-lawyers, and those non-lawyers can become title insurance agents and work for a national title insurance company, and they can do closings. But the task there is basically to do the paperwork and to issue a title policy for the lender and buyer, not to represent the buyer as a lawyer or as there's very little duty that settlement agent has to a buyer in that state.
So in both cases, you have somebody there who is handling the whole transfer of the papers. However, in Massachusetts, it's an attorney and they have to certify the title. And in New Hampshire, it is a title agent who is issuing the title insurance policy.
Correct.
Is that correct?
That's correct. And even in New Hampshire, when I am acting as the lender attorney, I have a form that the buyer signs saying I'm not your attorney, and if you have a right to an attorney. So I'm really only representing the lender and issuing title insurance for both the buyer and lender. And if the buyer ever has an issue, they have no recourse against me as the title agent because I was representing the bank, not them.
Yeah.
Right.
And so there's an overlap there, certainly, between the two. It sounds like in New Hampshire, I could have an attorney be the settlement agent.
You can, but the practice typically for attorney settlement agents is to limit their responsibility to the lender.
They wouldn't be acting as an attorney.
Well, they're acting as an attorney for the lender.
Okay, for the lender.
But they're isolating their responsibilities to the lender.
Okay.
So like when you sign a contract with someone, you could, if they breach the contract, you could sue them because they breached the contract, right? In a New Hampshire residential transaction, if I'm representing a bank attorney, you don't have a contract with me as the buyer. You have no right to sue me for my work because my contract's with the lender.
Okay.
So that's really a big difference between the two states. You can hire a lawyer in New Hampshire to represent you who's not the settlement agent, but that's duplicate costs.
It's a little bit redundant.
Right.
Yeah.
Right.
Yeah.
So in general, who hires the settlement agent?
Typically, the settlement agent's hired by the lender or the well, if it's a cash purchase, you can't get away from this responsibility. So even in New Hampshire, if it's a cash purchase and I'm working for someone, I have to be their lawyer.
Right. Yeah.
Now, if I was a settlement agent, I wouldn't be their lawyer. I would be their settlement agent. The duties would be less because they don't have the duties of a lawyer.
Okay.
Yeah, I sort of thought like sometimes people could close. We almost never do, but you could close at the bank who did your loan, and there's somebody who's a notary who kind of does the paperwork.
Yep, those are called witness-only closings.
Okay.
And those are even a step back from a settlement agent because they're not preparing the paperwork, and all they're there to do is acknowledge your signature.
Right.
There's not even a duty to explain what the paperwork is. So that's a third level back, which is not preferable if you're buying a house.
I actually think during a refi once, somebody came to our house and just did that, just notarized the papers.
It's more common with refis than it would be with purchases because there's less going on. Yeah.
Okay. So the lender hires the settlement agent or hires the attorney to handle the closing, just the closing part, not represent the buyer.
Right.
And who pays?
So the buyer pays as part of his documented closing costs.
Okay.
So the lender has a duty in the early stages to present the buyer with a good faith estimate of what their closing costs are going to be and what cash they'll need to bring to the closing. That's all highly regulated under federal law. And that settlement statement includes the settlement fee for the either title company or attorney.
Yeah.
Includes the title insurance for the lender. It includes appraisals, credit reports, flood certs, origination fees. And it also includes, prorations of taxes and escrows. So the lender has a lot of duty to outline the closing for a buyer. They're not allowed to deviate much from that at the final stages.
Yeah, that's one of the things that was changed with the TRID laws.
Correct.
And I think that was very helpful because even though people complain about TRID and it's added a little bit of bureaucracy to our jobs, I did see instances of where people were getting loans on the internet from an internet lender who was not familiar with what was customary in New Hampshire, and so they were underestimating all of the closing costs. And the buyer would all of a sudden get their statement the day before closing, and it would be a couple $1,000s off.
Yep.
Yeah.
And TRID has helped. It's because there's a requirement that the buyers sign off on their numbers 3 days before the closing.
Right.
So it's not as big a surprise at closing what's going on if they look at their numbers.
Yeah.
Yeah, that's true. They don't always look.
Exactly. Exactly. So if the buyer is paying the fees, does that mean the buyer gets to direct who the bank uses?
Maybe. So basically, banks differ and lenders differ in how they approach that. Some lenders have closed lists where they've sort of calculated who they want to do their closings and require the buyers to use those on their list. Other lenders allow you to pick your attorney, and they'll go along with the buyer and use the buyer's attorney. Lists can be large or they can be small. So like credit unions tend to have very small lists because they want to really control the process and they only want one or two lawyers doing all their closings. Mortgage companies might have a list of 60 vendors, and that's easier for a buyer because they can move along with those things. And then there's a lot of lenders who have like one-time approvals, so they recognize buyers might want to use their own attorneys, and they have a process for getting that attorney approved for one deal.
Yeah.
We come across that a lot because we're members of a insurance plan called the Hyatt or MetLife plan. And our names are on lists, and a lot of clients who have those insurance plans. They work for Raytheon and have
It's like one of their employee
insurance.
benefits, right?
Yeah, they can get the settlement paid for free as part of their insurance plan. So they call us, say we're a Hyatt member, can we use you as a closer? But they're going through a bank that has a closed list, and we'll get on as a one-time referral or something like that.
Yeah.
Okay.
From my standpoint, I like working with a title company regularly, and I like a title company that works with the lender regularly so that everybody knows their systems and their procedures and their forms. Makes it go smoother.
It is. So that, that's a two-way street, because it sometimes, steers people into very small spaces. But from the perspective of lenders, realtors, appraisers, attorneys, they like to see smooth transactions where all the players kind of know the game.
Right.
And a lot of times, if a transaction gets steered to a lawyer, say, who does 80% criminal and personal injury,
Right.
and 2% real estate, they're not going to have the system set up to make that transaction smooth, and it's going to get kind of rocky, and they're not going to communicate as well because they're not as used to being in the system. So it's a mixed bag,
Yeah. I could, this goes back more to the 80s in Massachusetts, but I certainly remember anytime that we had an attorney review the purchase and sale for the buyer, I knew whether they were a real estate attorney by what changes they made, or whether they were the buyer's cousin who maybe practiced a different
Right.
form of law. Because I would see it come back, and there were certain changes I always expected and recognized, and then there would be other changes that really didn't seem to have any impact, and they were missing some obvious things. So.
Right, and because lawyers are, a fairly large scope of people.
Right.
We all go to law school, don't learn a lot about practice, learn a lot about theory, and then we go to work in our specialty areas, and then people sometimes ask us for help in their areas that are not our specialty.
Right,
and, And we feel obliged to do that, and we go into it with good ambitions and good, intentions, but the language isn't always the same, because you're not used to, this is ABCD. Instead, you're thinking things out, and so from people who are in the industry, they see, I've never heard anyone say that.
Right, right, yeah.
And we have weird things that happen. Like, I've been doing this for 30 years. I think I've logged over 15,000 closings. And we had one.
So you have a lot of mileage, is what you're saying?
Yes. As you can tell by my gray beard, for the people in the audience. But one of the things that happened recently, the first time it ever happened to me, and I always like when things happen first time at my age. So I had a seller rep, and a good seller selling a property in Woburn to a couple who were using some really weird tactics to push their agenda.
So wait a minute. Seller rep meant that you were representing the seller's interests in this transaction,
yes,
right? Okay.
Yes.
Yeah.
And the buyers wanting some, concessions and things like that, they took the home inspection and brought it down to town hall and delivered it to the building inspector. which was a first for me, and and it caused some grief because there was an open permit that we were working on closing that became a fight.
Our favorite subject,
like that.
yeah.
So, but it was a different tactic. So maybe a good one if you're a buyer.
Yeah.
So maybe we should talk about what is meant by a title company and what is owner's title insurance.
Sure. We'll talk a little about title insurance. It's a confusing subject for a lot of people, because people are used to car insurance and health insurance and other things in the insurance world. Title insurance is different in many ways. One way it's different is it's a one-time cost. So, most insurance, every year you put your premium forward, and if you get hit in the car that year, you got a premium, but next year if you don't have one, it's not going to cover you.
Right, they're going to cancel it.
A title insurance is a one-time fee you pay at closing, and it covers you for your whole life, actually, because even when you sell your house and then someone else buys it and then someone sues backward, your old title policy stays with you, even though you've sold the house 5 years ago.
You're still covered, yeah.
Right. So it's a one-time fee that covers any kind of claim someone might have against the title to that real estate. And title is different than the house. So like a house might burn down or have difficulties with construction, and no insurance is covering that. It's covering the land. So if someone say someone sold you a house and there was an IRS lien that they hadn't paid off, that would now be on your house because that IRS lien travels with the house.
Right.
And if the IRS was knocking on your door someday saying you owe us $50,000 because this lien's on your house, they would knock on the door of their insurance company and say, you guys pay that $50,000 off because you gave me clean title policy. It also covers things like someone got left out of a will 80 years ago. They go to court, they challenge the will. The court says, yeah, you should have owned half of that. And now the person's knocking on your door and saying, I've been awarded half this property from the court. You want to pay me off from your half of your property? And they go to their title insurance company and they pay them off. It also includes defense costs. So if you're fighting for your title or you have to hire lawyers to fix your title, the insurance covers the cost of that. And I know Jen's seen it. There's small title issues that happen all the time that might take 10 hours of lawyering, but 10 hours of lawyering at $300 an hour is $3,000. And people don't like paying that, so they want their title insurance company.
Do people complain about lawyers' fees? Really?
Here and there. So title insurance, and then there's an owner's title insurance and a lender's. So when you take out a mortgage, the bank is requiring you to get their coverage for them.
Because that's the collateral for the loan.
Right. They want to say make sure the loan isn't voided because someone takes the title.
Right.
And all that does is if there's a claim and the title is lost, the lender gets paid. So your mortgage gets paid. Doesn't mean you might lose your house, but your mortgage gets paid.
Right.
Yeah.
Now, if your mortgage is 95% of value, then that's not so bad. But if your mortgage is 50% of value, it's not so good. So you always really want to have an owner's title insurance because that's covering you, not the lender.
And when you refinance, you don't have to purchase the owner's title again because you already
have it. You're just replacing the lenders. The one thing about title insurance that is always something you want to think about, though, is when you buy your title insurance, it's for a value, okay?
Right.
And values go up and things happen. So, for instance, if you bought an owner's title policy when you're buying a piece of land, it might be for $70,000 for the land.
Mm-hmm.
You then put a construction loan on, and now the house is $500,000 on that land. If there's a title claim and it's a bad one, the title insurance company would rather, instead of paying out tons of money, give you your $70,000. That's the limit of the policy.
Ooh, I did not know this.
And then you're kind of like left holding the bag.
Yeah.
So it's good to review title insurance if you've lived somewhere a long time or if you've bought and then built on a property or something like that.
So can you get a title insurance policy that's sort of a replacement value?
You can upgrade your title insurance by usually doing an appraisal or getting, so that now the title insurance company, we would take the rate you paid. Say you paid $300 for $80,000.
Mm-hmm.
Now it's $500,000. You pay the difference in value, and upgrade, and they'd want to know that the title's clean from the last one to there, which we would look at. Yeah. And then they'd also want to know that they're not over-insuring. So they're only insuring for what's really there.
So we purchased our house for, I think, $300-ish. Mm-hmm. It's worth $400-ish.
Right.
We're going to be paid off in 5 years. My current title insurance is only going to cover me for that original purchase price.
Yes, but that's not so bad. That
should be enough.
Because most title claims are about
it includes the
defense
land,
cost. Well, most title claims are about defense cost and fixing title, not paying out full.
Right.
Okay.
It's a rare case where you lose title 100% and they have to pay out the full value.
Right.
But if that happened to you right now, someone was making a $400,000 claim, the title insurance company might say, "I'd rather just pay you guys the $300 and be done." So,
and be done with it.
Right. So that is there, but it's when the valuation's a lot different than the value.
Like that
value.
The idea of building land. One of the things that I usually will say to people when we talk about the title search and the title insurance is that, we've been shopping for a house, we've been looking at lots, we've been looking at houses, you're going to go to closing, you're paying all this money, you're going to get a key. It's all about I'm buying the house. But really what you're getting is the piece of paper that says you own the house. And I sort of...
And the land.
And the land. The property, essentially. And I sort of think of like old-timey, poker games and gold miners putting deeds in the pot,
Correct.
That was how real estate used to be transferred.
Yeah. And I'm always amazed that people are so focused on the house and so unfocused on the land.
Right.
So like a lot of buyers who are buying land really don't even know where their dimensions of their land are and really aren't that concerned with it.
Correct. Yeah.
They're very concerned with the garage and the bathtub and all that kind of stuff.
Right. Right.
But if you're buying a house and you think it has a lot of land and you haven't really looked at the plan or looked at the dimensions or walked it to see rods and
Where
stuff
the
like
marks
that,
are, yep.
Right.
then you're taking some risk because a lot of times the deeds don't really give you a good view unless you have a
newer subdivision.
Yeah,
Right.
Yeah.
Right. Yeah. The old deeds are a little bit vague.
Yeah, the meets and bounds. That's
Yeah.
Or
be
like
tricky.
you still have deeds, by Jones's property to a tree, around the corner
Yeah.
to a
Absolutely.
rod, that kind of thing.
Yeah, that kind of thing. So next we're going to talk about seller's attorneys, and we might go a little bit more into deeds. I'd like to touch on the upswing in cyber attacks on real estate transfers after we check in with Brian Frost for How's the Market, sponsored by Real Value Appraisal.
How is the market?
You tell me.
Let's talk home financing. Everyone asks me, what's the mortgage rate? Is it going up? Is it going down? Mortgage rates remain very favorable. According to the Mortgage News Daily, as of January 17, 2020, the average 30-year fixed mortgage rate was 3.7%. The national average rate for a 30-year fixed mortgage started 2019 at about 4.7%, so almost a point higher. It steadily declined during the year and leveled out at under 4% at 3.9%. In 2020, most of the experts are expecting rates to remain mostly stable, not straying too much higher or lower than that 4% level. So
It is sort of like free money, if you ask me. When we bought our first
free
house,
money.
we bought our first house, which
Somewhat
full
free, yeah.
disclosure was Ken's house
Correct,
that he
correct.
and his wife lived in.
Many a moon ago.
Small world, yeah.
Yeah, exactly. But our interest rate was 10%, and we just thought that was a great deal at the time.
Exactly. It's all relative, right?
Yeah,
Depends on.
yeah. And
what
you see a
situation
ton
you're
of different interest rates across your desk with the closing packages.
I do, but they are in the residential world. They're kind of compact. I mean, when
Yeah.
you get in commercial, things start to drift around in
Oh, yeah.
different ways.
Yeah.
But it's such a regulated government market, and I'm a big proponent of people really trusting their mortgage person more than shopping for that extra
low rate,
0.001%
yes.
because it's going to matter very little in their lives, and the transaction can get really shaky if you're just shopping rate.
I agree. And there are a couple of really big national lenders where a buyer will say, oh, I think I'm going to go with such and such. And I say, do you like calling an 800 number and talking to a different person every time? Because during the transaction, that's extremely stressful.
Yep.
Whereas we have local lenders that we work with who are happy to match different rates that people have found. And I know if something is going sideways, I can call them on their cell phone on a Sunday afternoon.
And they'll answer.
And they'll answer.
Yeah. I mean, in the refi market, it's a little
Much
easier to
different,
go internet or go big.
Right.
Sure.
But in the purchase market, when there's so many variables, you really want to have someone vested in it that very well. Both the realtors know and the
Sure.
lawyers know and the clients know.
And they use appraisers that
Right.
are familiar with
Right.
the local area and all of that. We had talked, you had mentioned earlier being a seller's rep. So for somebody who's selling a property, what are their options for legal representation?
Okay, so again, we really have to split Massachusetts and New Hampshire
Of
because
course.
they're very different practices. Let's talk about the practice in New Hampshire, which, being a Mass and New Hampshire attorney and being an attorney, I'm not super fond of, but realtors are very fond of it.
We are. It's easier.
So in New Hampshire, the practice has allowed realtors to be the drafters of the purchase and sale agreement.
Well, I'm going to correct you. We're not allowed to draft. We're only allowed to fill in the blanks.
Well,
We can't practice law without a license.
there's an accepted form,
Okay.
and then the realtors negotiate that form, and they sometimes add small things to that form and it's condoned by the real estate community and the real estate board, and that becomes the practice in this state. So basically, a buyer and seller have never seen an attorney when they sign one of the most important contracts in their life. And then secondly...
Yeah, because in New Hampshire, we also go straight to purchase and sale agreement.
Right. So there's no second stage.
No second stage.
And then secondly, there's no attorney oftentimes in the whole transaction. So
Because there's a settlement
right,
agent.
so they use a settlement agent who's not a non-attorney company or has an attorney working for them, but they're only doing certain things in the company, and then the closing agent's a paralegal at the closing table, and it goes through and it becomes the end of the game at that point. It works, and a lot of people don't have issues with it, and a lot of times no issues take place. Once in a while, when there are issues, it gets a little ugly because there's no attorneys in the picture.
And the attorney's coming in after the fact, after everybody's already made agreements.
Right, and there's, it gets a little messy. But it's a working system, and I have no problem with it. But in that system, there's very little seller representation.
Right.
So basically, an attorney is not usually going to represent the seller. The title company is going to do the deed for the buyer. And in the old world, doing of a deed was a legal practice. Now we're considering that non-legal and saying it's just a customary clerical.
Clerical, yeah.
Where they take the old deed and convert it into a new deed for the seller. A lot of problems take place in that zone. And they charge a small fee to the seller for doing the deed preparation. And that's the practice. So that's how it works.
So
in
before
New
we get
Hampshire.
to Massachusetts, I want to mention a couple things from the realtor side. We have a list of approved clauses that have been written by attorneys, so we should not be making up our own clauses. And I do have relationships like with you
Right.
that if I'm writing something up, I can call you and be like, I need advice on this.
Correct.
But there is also a clause that we can add to that New Hampshire purchase and sale agreement for either or both parties to have an attorney review period after it's signed. So the fact that we go straight to purchase and sale agreement, a lot of times I feel like because of the timing of it is why the attorneys aren't involved. But I could easily say, hey, there's a 5 to 7 day attorney review period after this is signed.
But it's also the practice, and the other thing is it's a cost-conscious system.
Right.
So, buyers and sellers are looking for the cheapest transaction, and bringing attorneys in costs money. And
Right,
they try to avoid that. And the system works generally in the whole.
I was going to say, that's why we like it. It's straightforward.
It has some issues, but it works in the whole. And that's the practice in New Hampshire. Now, what that does for the title companies or the attorneys doing work in New Hampshire is it puts an enhanced burden on the title company.
Correct.
Because now the title company is responsible for getting payoffs of loans from the seller's side. They're responsible for getting water sewer readings from the seller's side.
Right.
They're responsible for getting the deed from the seller's side. They're responsible for handling
recording a death certificate or
weird
something like
stuff
that.
on the seller's side.
Yep.
So they actively are interacting with the seller to get the buyer's transaction done. Whereas in Massachusetts, 90% of the time there's a seller's attorney. And that seller's attorney, if we see an issue, we just say, hey, seller's attorney, there's a title issue. Hey, seller's attorney, get me the payoff. Hey, seller's attorney, get me the final water sewer reading. Hey, seller's attorney, I need a 6D certificate, which is when you have a condominium. And that seller's attorney might divvy off some of that stuff to the realtor, or they might handle it themselves. But there's a conduit for the buyer's attorney to sort of work the seller's issues out and not have to do it themselves. So even though in New Hampshire the settlement fee is lower for the buyer's attorney, they do more work than in Massachusetts, where the settlement fee is higher and they're giving all the work to the seller's attorney.
So what it sounds like to me is that the process in New Hampshire is pretty efficient as far as the steps that are taken because there's less people involved and it's more streamlined. But in Massachusetts, it's more efficient and streamlined because everybody's roles are very defined and you're not overlapping.
Yes,
duties.
and if live free and die is the nature of New Hampshire, there's a lot more that is unknown or is trusted in New Hampshire, where in Massachusetts there's a lot more realtors are looking to attorneys to help them, sellers are looking to attorneys to help them versus trusting the buyer's attorney.
It just seems like it's a lot more complicated.
It has some more complication, but there's more protection for each party.
And there's more examination.
Right. So the realtor's more protected, number one. The buyer's more protected, number two. The seller's more protected, number three. So if you're looking for, a transaction that has more protection in it, but a little more moving parts, Massachusetts is the place to be.
Yeah. Yeah. So in New Hampshire, we're sort of doing it ourselves, but we're taking on a lot more liability.
Right.
Yeah.
And the buyer is really winging it much more because other than a title policy, they have no recourse.
Right.
I mean, they have recourse against realtors, and you know that happens all the time.
Knock on wood. Now, what if the sale is part of a divorce, or there's probate, or there's bankruptcy?
Yes. So, what typically, if you're a settlement agent and you're working for the bank and the buyers to do a closing, and there's all these issues on the seller's side, you sometimes might try to tell them, we can't do your deed, or we can't help you with those issues, get your own attorney.
Right.
That's when in New Hampshire sometimes the sellers are pushed to get their own attorney because we don't want to get into the issues between these parties and how they're going to deed and how much they're going to get from the closing and stuff. Or there's a probate and they have to go to a lawyer to get a probate done before they're allowed to sell the home because they've inherited it.
Yep.
Or there's bankruptcy issues where they're not allowed to sell because the trustee has to approve the sale. So when those situations happen, the sellers are sometimes pushed to dealing with attorneys.
Yeah. Yeah, that makes sense.
One way or the other to make their side of it happen.
Yeah, that makes sense.
What's this say? I've heard you have an app. I don't know what that means.
You have an app.
Do you have an app?
I don't have an app.
According to Amy, Monarch Title has an app.
Monarch has an app.
Monarch has an app.
Yes,
so if you want to calculate
I don't have a clue.
what your title insurance and settlement is going to be. So I'm here to inform you that you have an app.
I'm glad we have an app.
Well, what about wire fraud? We're hearing a lot of alerts about wire fraud these days.
Yeah, so that's a dangerous area for all of us. And I guess the starting point of that is criminals are out there trying to grab people's money off the internet.
Yeah. Luckily, I don't have any money. So.
And the bigger institutions, say Bank of America or whatever, they have two things going that we don't. One is they can afford an army of software people to try to protect their systems.
Mm-hmm.
Sure.
And secondly, if they have $1 million hit, they can pay it off without it hurting their bottom line.
Yeah, no problem.
Okay?
Yeah.
So these cyber criminals have seen and kind of figured out that the money flowing between title providers
hundreds of thousands of dollars
is huge, and these title providers are like small little companies that don't have the sophisticated systems.
Mm-hmm.
So they've become targets, and realtors are also targets because realtors are in the communication stream. So so when a realtor communicates, I want you to wire my seller at
their
these closings, their
Yep.
proceeds, here's their wire instructions, and some criminal picks that up, they can pretend they're the realtor to us.
Sure.
With the same letterhead and the same look and say, oh, we gave you the wrong wire instructions, send it here. And we think we're talking to Jen.
Right.
And we're talking to China,
And plus, we're busy. We're not really looking that close.
And they
you might not even be in that second email.
And they could do a phishing thing where they make an email address that looks just like mine, but it's one letter off. And so you might receive an email thinking it's from me, and it's not.
Right. So there are a lot of Massachusetts lawyers especially have stopped doing wires, which makes transactions crazy. But there's a real fear of wires.
Right.
And then on the other side of it, there are good fund statutes that tell us we're not allowed to give sellers money until we've cleared their funds.
Right.
And when they give us a bank check now, they're taking 2 days to clear the bank check. So if we're giving out the seller money and our bank check hasn't cleared, we're kind of violating that. So that's why wires were encouraged, because they were cleaning funds right out. And now we're caught between those two hard spots because
makes it tough to do back-to-back closings.
And sellers are uncomfortable back-to-back. And also, even if you have a seller who doesn't have a mortgage and they're getting $400,000 and you're telling them we can't give you a check for 2 days until the buyer's bank check clears,
then they don't want to give the keys to the buyer.
They're not really happy. Yeah.
Right.
So there's a lot of weird money issues happening out there right now.
So from what I understand, the key is if you're going to give wire instructions, you need to do it by phone or by snail mail or fax.
Yeah. Or typically what we're doing is we're verbally confirming either at the closing or on a phone call to verify the email or the.
Right.
So like at a closing we have a very long document of wire instructions where they sign off and everything. People are there. I can ID them and stuff, and we don't accept a change by email of that.
Right.
You know? So if it's going to change, we're going to want them to come in and re-sign or something like that. You know, these different practices.
So the point of vulnerability is usually the email.
The email,
Yeah.
and the wire. Meaning,
right? But if the wiring instructions were on an email, you're going to want to verify that separately.
Right.
Okay.
Right. With the person in front of us, with a picture of them and a license, that kind of thing.
Yeah, that kind of thing. Yeah. So to summarize, a settlement agent and a real estate attorney are not the same thing.
No, but they do
They
similar
can overlap.
work. Yep.
And New Hampshire and Mass are quite different.
Yes.
And if we need you for criminal law, I probably should go to a different specialist.
You're not going to get what you need.
I'm not going to get what I need. But what I can get from your law firm is real estate.
Yeah. What other services? Do you
Yeah. So
provide?
we're sort of, we've over the years I've done everything, but as you get older, you go trim down to what you are good at and what you want to do.
Yeah.
So basically, our firm is residential and commercial real estate, estate planning, wills, estates, trusts, business organization, meaning starting an LLC or starting or selling a company or buying a company, and bankruptcy, which is sort of a little side niche. And that's not usually the bankruptcy is on the debtor's side, not the creditor's side.
Right.
So I'm helping people get rid of all their debt.
So you're not doing the collections part. You're doing you're helping people
do a little
that,
foreclosure too, but not too much.
Not too much.
Right.
Well, I really appreciate you coming in today.
Thanks.
So
It's been a pleasure.
Ken Gould
Thank
with
you.
Gould & Gould Law Firm, with Monarch Title, and with Old Patriot Title. And we will see you next time around on Spouses Talking Houses.
Music courtesy of the Eric Lindbergh Trio. Please visit his website at www.ericlindberghworld.com. Jennifer and Brian are licensed to practice real estate in New Hampshire and Massachusetts. Brian is also a certified general appraiser in New Hampshire. They are not lawyers, accountants, home inspectors, or therapists. Real estate customs and rules may be different in your area. Each Keller Williams Realty office is independently owned and operated. The Realtor name is trademarked to members of the National Association of Realtors. If you are currently under contract with a real estate agent, this is not intended as a solicitation. Views expressed on this podcast by Jennifer may not be shared by Brian and vice versa, nor are they necessarily the views of Keller Williams Realty.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.